Let's bring in Adam Button. He is Chief Currency Analyst at Forex Live, joining us from Peterborough, Ontario. Adam, great to have you. I want to start with your reaction to the Fed minutes just out about 45 minutes ago. I couldn't help but notice there's a little more language in there about trade and the reactions that they are hearing from businesses in the United States about these trade tensions and adverse effects that could feed into their operations.
Markets kind of people, and there's this strong nudge in there saying, hey, we're really worried about this, and it's really a message to the White House, and their message to the markets is that, you know, the domestic economy is very strong. Those were their words, very strong, and we're going to continue to gradually hike rates. So U.S. dollars responded a little bit to the upside on that, but those trade risks are definitely looming.
And to stick with the theme of trade, why don't we talk about the U.S. tariffs set to go into force against China, $34 billion in Chinese goods, going into effect at 12:01 D.C. time. That's according to the U.S. Trade Representative's office in an email to Bloomberg. Obviously, that's casting a long shadow here. Where is the best place to hide in the currency markets right now?
This is one of those things with a trade war where you feel like you are a frog in a boiling pot of water, and it's just getting hotter and hotter with these trade headlines, and no one believes there's going to be a trade war. And, you know, eventually the market's going to die here. You know, we have equity still fairly upbeat. But eventually we're going to hit a tipping point, whether that's from some sort of U.S. retaliation because China plans to retaliate to these tariffs right away. And eventually it's all going to fall over. And this isn't really a good spot to hide. There is nowhere to hide. This is the King Kong and the Godzilla of the global economy getting into a battle. And really, I mean, you can only go into underground, to safety, to bonds, to cash, and wait this out because, you know, valuations are elevated here, and it's really a dangerous spot to be as this really starts to blow up.
Yeah, it seems like a lot of folks are seeking safe haven in the U.S. dollar. We did see some softness there looking at the Bloomberg Dollar Spot Index last week. But, you know, accounting for the Fed minutes and some of the other movement over the last few days, it looks like the dollar is at a one-year high or pretty close to it.
Yeah, and it comes back to the strong economy in the U.S. I mean, there has been a truly massive corporate tax cut there. The economy is growing. There are more jobs being created. The ADP numbers today were solid. Non-farm payrolls on Friday is going to be solid. And, you know, the U.S. dollar has kind of defied skeptics throughout the year and continued to inch higher.
What about, back to the China discussion, what about when China retaliates? They have said that they will. We are expecting it. They've used the phrase equal scale and equal intensity. How does that shuffle the picture once that comes through?
They're serious this time. Chinese President Xi visited with American CEOs a couple weeks ago, and he said, you know, you have this expression in America about turning the other cheek. We don't have that expression. We hit back. And that's exactly what they're going to do. I think they're tired of playing games. And then Trump is left deciding how he wants to go forward. And there's no indication that he wants to ramp things down or the people around him want that. So the risks are certainly tilted toward safe havens here. And that will benefit the U.S. dollar and hurt the Canadian dollar counterintuitively.
Mm-hmm. Tell me what you're expecting next week from the Bank of Canada rate decision. There has been some criticism around the bank's communication strategy, the way that they are sort of preparing markets or not preparing them, I think, as much as a lot of investors would like. What's your take?
I mean, the Bank of Canada has really lost the plot. You know, as their mandate is to promote the economic and financial welfare of Canada. And as a central bank, what can you do to deliver that? It's to be consistent, to be predictable, to give businesses a sense of what's coming. And when you go into every speech and every meeting with the possibility of a U-turn, then businesses don't know what to prepare for. People who are looking for mortgages don't know where rates are going to be in a month. Now, we're going to hike rates next week. But the market thinks it's going to be some kind of dovish hike because the Bank of Canada always seems to come back to neutral. But time and time again, they bounce around the market. And meanwhile, in America, you have the Fed saying we're going to do gradual hikes. They hike every second meeting. In Europe, you have the ECB talking a year plus down the road about managing expectations for what's coming. And the Bank of Canada seems to think that it's better somehow for the market not to know what it's going to do. It's nuts.
I'm looking at the odds of a hike, of a probability of a hike on the Bloomberg terminal right now, looking at an 85% odds being given by traders right now. As you say, it's probably going to happen. It's just going to be a dovish hike. How do things play out through the rest of this year, looking out at the last half of 2018? Do you feel comfortable weighing in on what the Bank of Canada might do in, say, September, October?
Even August, the next meeting, it's up to about a 20% chance of a hike. That could evaporate, could go much higher depending what the Bank of Canada says. And if you look over the last year, you had anywhere from a 20% chance of a hike to a 98% chance of a hike at this meeting, and it's bounced all around. The Bank of Canada will say we're data dependent. That's what they reiterate. We're super data dependent. And then you look at the data over the last month: poor jobs, poor retail sales, poor manufacturing. Release after release was poor, and then Poloz came out and said, well, we're just going to ignore, the last set of data points. He actually said that. And, you're trying as a trader to read from his playbook, and it just doesn't make any sense. So you kind of have to go on the last thing to come out of his mouth. And so we wait for next week. And this is all great if you're a foreign exchange trader, but if you're a business, you're someone who's looking to get a mortgage, it just doesn't work. And I hope the Bank of Canada commits to something a little more open and gradual and clear for the economy.
All right, Adam, thank you for your thoughts. That was Adam Button, Chief Currency Analyst at Forex Live.